All right, we'll discuss in today's show whether bulls will retain control over the crypto markets, as we are still seeing a sea of green, right? On the hourly over here, a lot of the altcoins are starting to push up. We'll talk about one big trade that I'm currently looking at, trying to establish a position in, and we'll have a look at the stock market, the bear moons, all things crypto. Smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. Remember, this is going to be a big week for the crypto markets. Not only is it the token 2049 event, which I'll be there, but that also ends up oftentimes being a sell the event type of situation a lot of the times around these crypto conferences. So do look for a little bit of trap scenarios within the crypto markets. And then the other thing is that we have a lot of data that's coming out this week. On Friday is probably the biggest, is the non-farm unemployment change. We'll see what happens over there. If there is any shift, that often dictates what the Fed's going to do next at the next interest rate hike or cut, right? So looking at the stock market over here, relief rally still in play. It had a pretty strong weekly close, but remember we said the main area of interest that we focused on is going to be that 0.618. That means we need to see the stock market closing above 5,700 in order to be considered in a much healthier state, right? The DXY, which is the dollar index, is now starting to consolidate underneath the range lows. What you do want to be aware of if you're a bull is that this doesn't deviate, right? A deviation is essentially a drop below a key level like that, and then a reclaim back above that key level. If we did see that, that will create destruction within the broader markets, both crypto and stock markets. But for now, it's holding underneath that. Multiple candles consolidating. If you start to see some rejective candles forming over there, then that probably leads it into the next leg down, which could bode well for continuation of the crypto markets and the stock market. Gold still looks like it may have put in a bit of a top over here. That is a major signal over here. I think that it at the very least makes sense to open up some short trades over here just as a hedge. Remember, full confirmation of this will come if you start to break below 2,970. Give it a round number of 3,000. Break and hold below 3,000 and things will start to look good. We have relatively low volume over here. You can see the volume starting to drop off. 24-hour liquidations back below 200 million, which whenever you see this, this tells you that a big move is usually going to come, right? You can see it with these little bars over here. Usually you have low, low liquidation levels, meaning not too many people are getting liquidated because there's an inability to choose a direction. And following that, that contraction eventually leads to expansion, and then you start to put in the big moves, right? So daily exchange volume on the 7-day moving average is increasing. We'll refresh this today. We'll see how this week goes. We haven't broken that trend. It's still lower lows and lower highs. Maybe we'll put in the first of the lower highs, right? Now, this is an interesting chart that I want to have a look at, because we said if the bearish case does actually play out and this is a massive bull trap, then one of the things you need to look out for is a rejection coming from this key level. If bears were in control, this would be the point that they would be taking control from. If bulls are in control, you'd expect them to smash through these levels, right? Now, the first thing that's interesting is you'll see that bulls have officially closed a full weekly candle back above the 21 weekly exponential moving average. One of the things that we look at as one of the easiest idiot-proof guides that you can look at is if bulls can hold price above the 21 EMA, which is the yellow line, and specifically it's angled towards the upside, right? That's the key point. You have to look at as well, which is the angle. If it's flat, right, that doesn't mean much. If it's angled upwards, it means bulls are in control. If price is below it, but it's angled towards the downside, well, bears are in control. So as you can see, getting back above is pretty significant. You got the stop and reversal indicator, which is coming in play right at that 0.65. If I zoom in over there, you can see that little asterisk sign. That's currently this week right at that $97,000 region. Now, keep that level in mind. I'll show you why in just a minute. If you can get back above this level over here, that will show that there's a durable shift that's occurred within the market, and bulls are most likely taking back control. And then, of course, any pullbacks that occur are theoretically for buying, where you're looking at continuation higher, and this will drastically increase the probability that you'll probably take out the all-time highs, right? So definitely getting into a very interesting place. What this means is that during the course of this week or next, we should have our answer, right? This week is very, very interesting because you're also coming into the top of this parallel channel, the parallel channel that's guided price towards the downside. Ever since losing that, you can see it's been respecting that level. Now, I said keep that stop and reversal indicator in mind because it's situated at that 0.65 level, right? We're looking at the 618 to 65 fib retracement. That equals your golden pocket. That's where the most optimal trades are taken, both short and long, right? So if you look at that, well, that's lining up exactly with the bottom, or at least the top of the parallel channel that's guiding price towards the downside. So you have a very, very, very key point over here. Remember, volume has been relatively low as per this and as per this, right? Which means when there's low volume into a rally, usually that can be indicative that there is a bit of a trap scenario. Not only that, but we also have liquidity that's situated just above at 95K. That would mean you would spike up into that level over there as a possibility. And we have the presence of a bear moon. What that means is if the bearish case were to play out, what I'd be looking for is something like this. You can see the order block there that led to the breakdown. I would therefore be looking for something like this. If price can't maintain, right? If you spike back above that key level and you break back below, that's your confirmation, right? You probably want to be taking head short positions over there. Short trade entered over there. Stop loss slightly above that swing failure pattern. So deviation above the key level. Again, where does it line up with? The golden ratio, the golden pocket, right? The 0.618 to 65. That means you'd essentially be spiking into this region like this, failing at the high volume area, deviating that level, rejection from the stop and reversal indicator over there. That would be your massive bull trap playing out, and then you'd be looking for low prices. If you break above that, of course, then it's the alternative, right? So if you see price holding up above this, because Bitcoin has shown a lot of relative strength, if you see something like that and it consolidates above that 96K level, that's a strong indication that you've now broken all of that bearish structure and you're ready to go much higher and target towards the all-time highs. And we know what happens. Usually you won't see a triple top, right? A triple top over there. Unlikely. If you come back into that area over there, chances are you're going to accelerate back to new all-time highs. Possibly then we get that target that we originally had from months and months ago, which was that $125,000 level that was based on a fib extension, I believe, to 1.618. So that's what we're looking at. But the more interesting trade is not Bitcoin. The more interesting trade is actually Ethereum. Remember, TD sequential 9 bottom over here coming into play, looking for a bit of relief on the ETH BTC pair out of this key level over here. So if you can hold this and you can start to push up, even a small bounce over here would result in a lot of big moves within the altcoin sector, right? So I did a full show on this, not yesterday, sorry, the day before, was on Saturday. If you haven't already watched that, go through and watch that video. It's under the video section, under my profile on the Crypto Banter main page over here. And we're looking at the RSI, which is coming to the key level. We're looking at the range lows over here as well on ETH BTC and a potential bounce out of the zone. Now, you could still sweep the yellow, but it also could be theoretically front run, right? We spoke about the low over here with the high volume that's coming in. If you look at this volume profile, look at this massive amount of volume that's come in. And a lot of those high volume areas like this one over here led into pretty strong moves. So could it be that you're getting a bit of a reversal that's taking place over here? It's absolutely possible, right? What's more important to look at is the USD pair, since that's actually the trade that we're taking. We're not necessarily taking this trade to try and make more Bitcoin, but it is always nice to see what the pair that you're trading is doing against Bitcoin, because if it's coming into key support, well, simultaneously the USD pair is showing you something that looks bullish as well, then there becomes an opportunity over there which increases your odds, right? So you have, it's not a perfect, falling wedge that's occurring over here on ETH, but ETH coming into support with a bit of a falling wedge taking place over here, starting to press into the top of that level over there. We spoke about as well in the video I did on Saturday. When you do get this bullish wave over here, that and the cross that starts to occur on the money wave, when you look at your momentum oscillator, that rounding out, right? That rounding out over here, and you can see the little crosses that take place, right? So the rounding out and then the cross between those bands, that's usually indicative that you're about to see a move. And what we outlined is that even in a bear market, you still put in sizable bounces, right? You put in a 46% bounce over there. So if you followed the lower of the bounces, at least the smaller measured moves, well, that would still be a 50% move, which could take you up to about 2,300. We then spoke about how there's a lot of liquidity in the form of short trader stop losses around that $2,200 level, and things are starting to line up over there, right? If we also look at our momentum oscillator over here, you can see the previous times that we did get the cross between the bands. There it is. You got the cross between the bands. That followed up with a pretty sizable move, right? So you're coming into your stop and reversal indicator very, very soon around that 2,000. If you can break that level, then you're probably shifting this trend significantly, and then you can trade that all the way up to the 30 moving average on the 5-day time frame, right? The good news is that you've had a full candle close above the 3 and the 9, and this is starting to roll over, right? Getting ready to cross towards the upside. So it is starting to line up and look potentially good, right? Looking at a couple of other key factors, this is going to be an important area to get back above, is going to be, of course, the 50 EMA over there. The 50 EMA, which is the red one coming towards the downside, is acting as resistance on the daily. But I want to show you what's happening on the 4-hour right now. So before we go into the 4-hour, remember what you consider this is you have a tight trading range over here, and then ultimately price broke. When you reclaim that trading range, that oftentimes is where your best long trades come into play, where you could trade that back to the top side of the trading range. The top side of the trading range over here is going to be $2,000. Remember, if you get back above $2,000 over there, you break that stop and reversal indicator, and you start to open up targets much, much, much higher over there on ETH, right? So quickly going on to the 4-hour time frame over here, this is currently what it looks like. Let's just clean that up a little bit. So on the 4-hour time frame, let's remove that highlighting. You can see that the 50 and 200 EMA are attempting to cross, right? It's getting very, very close. If price continues to maintain for a couple more days above this level, above 1750-ish, you should eventually cross that zone, right? So you're putting in higher highs and higher lows, reclaiming a pretty key level, and sooner or later you're going to get the cross. I also like the way that these candles are forming. It reminds me of that one over there. Very, very, very similar, right? So if ETH bulls can maintain this level, pretty much, I would probably use this wick now as an invalidation. If you wanted a tight entry, you could use that wick as an invalidation, because if you break below that wick, that means you're also losing simultaneously the 50 EMA on the 4-hour time frame, and then you can consider that a rejection off of the 50 and the 200 and say that, well, now you're probably going much lower, right? So keep an eye out on this as a potential trade. I'm also looking at the funding rates, which are negative, right? Every time we've seen the negative funding rates over here on ETH, we have got a little bit of a move, right? It's found a little bit of a local bottom. So it's a matter of attempting the long each time you get the negative funding, in the hopes that maybe a little bit of a trending move does actually start and it plays out with a big reversal on the ETH BTC chart, right? At the end of the day, it's a risky trade because you are attempting to catch a falling knife, but against the ETH BTC pair at least. But remember, there's a difference when you're trading for a long-term play as an investor versus as a trader, right? The ETH BTC chart doesn't really matter when you're simply just looking for a risk to reward trade. If you're risking, for example, $1 over here, you're risking $1. If you lose, you lost $1 to potentially gain $3, then the ETH BTC ratio doesn't really matter, right? But the reason I look at it is because I like to risk $1 to gain $3. But if this turns into a swing trade, because we need to reevaluate when price approaches a profit level, right? A profit-taking level. If I reevaluate and ETH BTC starts to fully reverse while I'm in a normal 1 to 3 trade, now I have the opportunity to leave that and turn it into a longer-term swing trade, right? And then continue to hold the position. So we have taken the trade, right? Again, it's if you go through to the video, pretty much entered at this level. This is on Femex. We spoke about why we took it on Femex. We're looking to take a lot more trades there because they're an A-book exchange, right? What that means is they don't trade against you. A lot of the other exchanges are B-book exchanges, which means when you lose, they win, which means they theoretically have a conflict of interest where if you get liquidated, they make money. That's not the way that it works on an exchange like Femex. They have a market maker that they work with and liquidity providers, right? So they're not incentivized for you to lose. Okay, looking at USDT dominance over here. Look, it came very, very, very close to opening up this trading range over the course of the weekend. I was looking at something like this. You could see putting in those lower highs, did break back above that. So this is something that we need to watch. What you don't want to see on USDT dominance, if you're bullish, is you don't want to see it reclaim 5.15%. So if it reclaims 5.15%, probably you're going to see a deeper pullback in the rest of the market, and that may result in something like this, right? So use these charts together. Let's move these next to the Bitcoin charts over here. Use these charts together, right? Because if you see something like this, the bearish case could play out, right? Like this. If you see price move down again, drop into this region, that drop will simultaneously cause the deviation into that golden pocket. But if it reclaims like that, chances are that you start to reject from here. And if this starts to gain acceptance above 5.15, well, at that point, you're probably pulling back quite deeply all the way down to, give or take, I'm going to be looking at about, $84,000-$85,000 as an area of interest if you do play out that bear moon, right? Which we're keeping a close, keen eye out on. Quickly going back onto this chart over here as well, on the weekly for Bitcoin. One thing I'm paying attention to is I think there were some similarities that occurred at the on the dead cat bounce relief rally into the last bear market, right? Which was this, right? Pay attention to that, right? If you did spike and break this and then it started to follow or fail soon after, that is something that happened over here, right? Have a look at that. So if you isolate and you look at this time period over here, it looks very, very, very similar, right? You started to reclaim the 21 EMA, it started to angle towards the upside, which means you need to see multiple candle closes, and you really want to take a trader's approach before holding long term, right? So establish your positions, be careful, keep a close eye out on all of your positions. And if you maintain and sustain above these key levels, then you can start to look at high prices. Once you've taken out all-time highs, you can probably relax, and then you can say, let's hold those positions as longer term swing trades. So those are the trades that I'm currently focused on. Is for right now, it's just Bitcoin and ETH really. You can vote in the poll over there. By the way, if you do want to join Femex, there is a link in the description below. They are actually giving you 20% cash back bonus on your deposit, right? So if you deposit $1,000, you'll get $200 with that. And for the first 200 people who sign up, you get $50 USDT bonus with that. And that is it from me, folks. A bit of a quick show today, but that's all that we're looking at. We'll see how things play out. I will update you as much as possible, right? And I hope to see some of you at the conference. If you see me there, come and say hi. I'll see you on the next one. Have a good day, and cheers for now.